Hey everybody, Marty Mazzora, good morning. It's the 18th of March 2020, Monday morning, 40 some minutes before the open. I'm going to keep this really quick. Posting this video below my headline of the day, Apple announces new iPad Pro with camera that can scan 3D objects. That actually is the most encouraging headline I've seen in several days because it reminds me, and it should remind you, that hopefully in the matter of weeks, if we do a really good job of containing this, of social distancing, which is the one thing that unequivocally has been working in the rest of the world, we can get this virus outbreak under control and get back to business during the course of 2020. The chart I have pulled up in front of you is a 5-year daily chart of the S&P 500. And I wanted to just kind of point out some technical factors that you need to know about, I think, that are impacting market movements. First of all, this big sell-off. It's big, of course, but the speed is record-breaking. People up here were way off sides. I illustrated that. We talked a lot about that internally. Cash levels in mutual funds was too low. Optimism among hedge funds and individuals was too high. Speaking of individuals, retail investors were coming in force. We had been pointing to way back here last summer fragilities that were building up. We made adjustments for that inside of portfolios and just kind of held that opinion because the data was telling us to. And then, unfortunately, folks were paying more attention to price movements and they got caught off guard as they unwound those positions, margin calls, stop losses hit, and so forth. A lot of technical factors in terms of the speed of this decline. Fundamentally, though, as I've been pointing to for quite some time, stocks really deserve to be trading quite a bit lower. It's just what's really striking is how fast they got here. So this level right here, 2,400 or so, and you can see it back here as well. This has been some really strong support for the market. Last night, futures just bounced off of that all night. Good technician would tell you that we might see a short-term rally off of this, and they may be right. My view is that we've been pounding on this so hard and for so long now that it's probably likely to break. I mean, the situations on the ground would sure suggest that they will. And when we do, folks, make no mistake, there are stop losses right below that. That's going to precipitate the fall. There's going to be more margin calls probably forcing selling. We're seeing that even in the gold market, which you could argue should be doing really well. Right now, there is such a rush to cash and a need for liquidity. Hence, the trillions of dollars now, virtually trillions of daily money printing by the Fed to keep all the systems running. But big money traders, small money traders for that matter, may be needing to find liquidity. And even the safe haven assets like treasuries today are selling off, or they were earlier. Gold is selling off once again. Things that you want to own in tough times, but right now, technical factors and the need for liquidity are pushing even those lower on the day. So we break through this. Clearly, 2,200 is about the next step there. Below that, you can find some real resistance that we battled right here in the 2015-16 correction, which is right around 2000. Below that, 1,800. We get down to 1,700, which is a number we've been, looking at here, and that would be the size of the bear market, about 50% from the peak that we experienced back in 2008 and during the tech bubble burst, the few years prior to that. So folks know that the movement around here, rallies like yesterday, some of that's going to be technical. The rallies will come as they beef up the fiscal stimulus plan, which was really big that they announced yesterday. Expect that they'll need to beef that up. Certainly the market thinks so, based on its reaction afterwards. And short-term technical factors, just so you know, we're not going to get into what all this means, but March options expire at the end of this week, and it's a big expiry, if you will. And options trading, options money making, people who are on the other side of the successful options trades that people have made have been getting killed, certainly if they're put option sellers up at these levels. So these options makers need to hedge those losses. So they've been shorting stocks and doing things and selling gold and so forth perhaps. That has exacerbated the downside. So as those options expire, you could argue that a good part of that negative gamma trade, and we're not going to get into what that means, but that gets washed away at expiration. And we could see, it's possible, we could see a rally going into the end of the week as those options expire. Ironically, This right here, when it bottomed, was an options expiration week. And back in 2008, when the market bottomed, it was an options expiration date as well. I do not expect, by the way, that this is the bottom. Other factors here, we were actually calling that right in here, literally on the day. You can go back and in the blog and you'll see a video where we were talking about that right there. Not calling the bottom here this time. In fact, expect that while we could get some relief toward the end of the week via technical factors, then at the end of the month, by the way, automatic rebalancing for portfolios that do that, portfolios that had an equity target that has just been taken to the woodshed over the last 3 weeks. Well, we get to the end of the month and those automatic rebalancing programs will be buying stocks. Whether or not that's more than just feeding the folks who are trying to get out of the market and we don't see much of a bounce, or we do see a nice bounce, which we may very well from that. Again, that's a positive technical factor that we should not allow to suck us into a market that all indications are have some more downside to like to think alleviate some of the excesses that have been built up. But of course, we have immediate concerns that are leading to market sell-offs as well. So folks, again, a couple things I wanted to accomplish. Wanted to just kind of talk about why I shared that headline with you today. Of course, this too shall pass. We'll get through this. And we'll get back to business as usual, and there'll be pent-up demand on the other side of this that we'll be talking about and calculating into how we manage portfolios and all those good things. And for sure, you're going to hear from me as much, if not more, than you need as we move forward. Thanks as always for watching and listening. Take care.